From our Stars and Dogs segment, it's time for this week's Star. And we have a real treat for you this week in our Star coverage. We do not often include a company in the current coverage, but the gains in the stock over the past, year to date really, and over the past year were too difficult to ignore. It's from our U.S. small cap growth stock research, and we present Applied Optoelectronics, AAOI, on the Nasdaq. The company is a leading provider of fiber optic network products for internet data center, cable broadband, and fiber to home markets. Yesterday, after market, the company announced its fourth quarter and year-end results for 2016. The stock early this morning jumped over 30% to $48.50. The company has now gained 108% year-to-date in 2017 alone, and is up 205% over the past year. All three of the company's end markets are driven by bandwidth demand, fueled for the growth of network connected devices that include video traffic, cloud computing, and online social networks. So some of the biggest growth drivers on the internet today. What is driving the growth, and what was announced yesterday that made the stock jump 30% today? Well, if we look at the company's fourth quarter, revenues increased 60% to $85 million. Non-GAAP net income was up to 84 cents per share from 22 cents in the same period last year, from 22 cents in the same period last year. So tremendous growth in terms of earnings in that quarter. Perhaps most importantly, though, is growth is projected to stay strong well into the next quarter. Its business outlook for the next quarter, revenues will be in the range of 87 to 91 million. That would beat this past quarter, which was an all-time record for the company at 84.9 million. The company is looking for non-GAAP net income to be between 80 and 88 cents, which would likely beat this last quarter, fourth quarter again, which was a record for the company. So you're looking at strong growth going into the next quarter. That's what's really driving that 30% jump again in the stock price and the 105% rise year to date. Now, what is driving that growth in the business, though? Well, AAOI is the majority market share supplier to two of the largest hyperscale data center customers in the world. That would be Amazon and Microsoft, the two largest and rapidly growing cloud computing players. In a recent presentation, the company stated that it is in the early stages of also doing business with a new data center customer it acquired in the third quarter of this past year. That customer is widely believed to be Facebook. So AAOI has stated that it is ramping up to critical mass with this newest customer, and that would likely smooth out some of the normal quarterly lumpiness that it's seen with its two largest customers within, and generate strong and likely sustained upward growth trend. Now, the stock is up more than 200% since our original recommendation last year. Midterm, the growth, however, trajectory appears bright, and we continue to like it mid to long term, despite the fact that it has had a 200% rise since we recommended it around this time last year.
Ryan, I'd like you to just talk briefly as well about when we first recommended the company, because when we recommended it about a year ago, shortly after that, there was some volatility in the share price, and the stock price went down. So
it's a great point, and it kind of serves as a teaching point that we really don't look, 1 week to 2 months to 3 months or even a year. We look at least a year to 5 years out on a stock when we make an investment. So when we originally recommended this company around this time last year, it was around the $15 range. They came out with a quarterly miss. Now, it was a miss, and their guidance going forward still was strong, but they missed in that quarter. So the share price dropped actually to $9. And we got a lot of emails from clients at that time and phone calls, saying what is going on with the stock. And I definitely understand at that point, because it is scary to see, your share price drop from $15 to $9 within a week period. Well, the business was still strong. They still had those two large hyperscale data center customers in Amazon and Microsoft. The guidance had always been for lumpiness on a quarterly basis, until they gained more customers and smoothed out those quarterly fluctuations. Well, they more than made up for that miss in the last 3 quarters of this past year and going into the first quarter of this year. So the stock has, been a tremendous winner for us, but it shows that, a company isn't just a quarter. A company is what it does year over year more than just on a quarterly basis. So that was a tremendous opportunity to buy the shares actually at a discount. And we're happy that we continued our buy recommendation on the stock and have reiterated that several times since. And the stock has been, like I said, a tremendous performer. But it teaches investors that, we're not looking at just a month out or the next quarter. We're looking at what the company will do, 1 to 5 years out. And on that time horizon, Applied Optoelectronics has been a star for us in our portfolio.